Hello and welcome to GSC Grays Podcast. I'm joined today by John Wallis, fellow director and head of our professional services, and we're going to be discussing about the impact of the current budget, but also some of the future trends that we're seeing within the industry and across the professional services. John, we're coming up to the budget, and there's been quite a lot of talk around changes in taxation and everything else. From a professional services perspective, how do you see some of the sort of potential changes that we might see affecting some of the work that you and the team are doing?
I think, there's obviously been a lot of chat about the budget leading up to the end of the month, but it seems to me it's going to be more of a balancing act this budget. I don't think we might see the kind of blockbuster changes that we saw last year's, but ultimately the government have got to try and balance fiscal responsibility with trying to drive some growth, because we've seen in all the figures that have come out lately that the economy is stagnant. So they're going to want to try and kick forward and build some of that growth back into the economy. And to do that, they'll have to make some changes, but they also need to try and balance the books. So we might see some taxation changes, both in terms of capital and income, but until we've got to that date, it's all a bit of a waiting game.
Yeah, there's just so much being talked about at the moment. To sort of try and make any decisions off the back of that probably would be inappropriate. Is that the advice we're giving?
Yeah, I would agree. I think after the budget last time round, there was a lot of people quickly scrambling around to see what they could and should do. I do fear that there's been probably a pause, particularly in the kind of rural landowning farming world lately, just where at the start people made some really interesting decisions and choices off the back of the budget, particularly with IHT changes. But I feel like there's a few that have kind of got their head in the sand again a bit at the moment and hoping there's going to be a major U-turn in policy, which ultimately I don't think is going to come. Yeah. There may be some tweaks, but a complete role reversal will not happen, in my opinion.
And you talk about sort of trying to generate growth and get the economy going, and one way of doing that is obviously public spending into infrastructure. And I know the energy department are doing a lot of work on sort of large scale projects and things. Are you expecting any significant changes, sort of not necessarily budget related, but generally in terms of direction of travel?
Yes and no. So I think we've seen a lot of change already. You mentioned the energy world, and energy, particularly in the work that we've been doing, has been a real growth area over the last sort of 5-6 years in particular. You only have to look at the local paper and you see another solar farm, wind farm going through planning, and it's been hot, the market, for the last 5 or 6 years, and that's due to a number of things. Basically, the cost of the equipment has come down, the price of energy's gone up, and all of a sudden these projects have become financially viable in their own right. So there's been some really good opportunities for landowners to utilise those schemes and move forward. I think where we've seen changes from a government perspective is in grid reform. So we got to the point, particularly in the energy world, where it was a kind of first come, first served basis in terms of grid connections. But what that meant was there were people making grid connections, not utilising them, and that was blocking up further developments. So it was actually started by the Tory government, but Labour's followed through with it, this grid reform process, and that's really shaken up the industry. And that does bring in some investment, like you mentioned. They're investing heavily in the grid to try and open up new connections, which is happening, and it will bring new opportunities to a kind of different trench of landowners where they may have not had an opportunity in the past where new grid has come online. So we're still doing a lot of work in that area, working with landowners to try and look for those opportunities, and I think that's only going to continue.
And sort of that grid reform, the few conversations I've heard sort of talked about, some of that is influencing the timing of some of the projects coming forward, and potentially some lack of investment now in certain areas because people feel they're already fully committed for a reasonable time spell. Is that the case? Yeah,
there's a lot of things that grid reform did, and one of that is exactly that. They looked at certain areas in the UK and said, actually, in that particular area, we've got enough solar that we need, we've got enough battery, actually it's wind that we're looking for. So that has brought wind back online with the planning changes that came in last year. But yeah, there still are some hurdles to that, and like you sort of just mentioned, developers have started to be, I think, a little bit nervous of a pending government change as well. The government that we have at the moment are very positive regarding their net zero agenda, and they've brought in policies and planning changes to help facilitate that. I think there is a nervousness that in 3.5 years there could be a completely different government with a completely different outlook. So we're seeing a real influx at the moment of these schemes trying to get through and under planning for the fear that if it doesn't happen in the next 3.5 years, we could see a dramatic change.
And we've talked about large scale sort of energy projects there. From a farming point of view, the net zero agenda is still there from a government perspective.
Yeah.
Are we seeing sort of farm businesses starting to look again at reinvesting in renewable energy, or is that something that's sort of paused a little bit?
I'd say maybe in the last few months it's paused, and that's probably slightly driven by profitability of farms just being under a bit of financial strain, and therefore looking at big capital investments for renewables right now might have just gone on the back burner slightly. But I do still think it's a real good and viable option for farmers to look at managing and maintaining their costs moving forward. These schemes 10 years ago weren't financially viable without a feed-in tariff. They now are, and we've got some schemes that we've done in the last 12 months that have got a 3-4 year payback. It very much depends on the type of farm. So things like intensive livestock, pigs, poultry, etc., high energy use, often during the day in the summer, can work really well with solar. Other stuff works a bit better with wind. But yeah, we are seeing farmers look to maintain their cost and manage their costs moving forward. And
sort of battery development has always been talked about being a big thing in if we could store more of the electricity and then use it when we need it. Is the cost of batteries coming to be more financially
on the bigger scale, yes, and we've got a number of big battery sites that are coming forward for planning in the next 12 months. On a farm scale, they're still quite marginal. I think where we see it the most is dairy. A lot of the dairy energy use is either early in the morning or late at night. Often it's dark. Solar hasn't sort of kicked in yet. So you can get a viable system in place with sort of dairy operations. Other than that, it's still quite challenging at the moment. And there are a bit more kind of revolutionary ideas regarding energy storage, things like pumped hydro and all sorts of things, rather than your traditional batteries. But I do think that is probably the area of the market that will move forward significantly in the next few years, and that's when it might make even more of a difference.
Yeah. And I suppose coming back to the potential changes we might see in the budget, there's been a lot of talk about IHT and the changes that we're going to see come into force from next financial year.
Yeah.
There was talk about maybe there'd be a U-turn or a change. Is that now being sort of put to bed?
Yeah, I mean, there's a different briefing coming out every week at the moment, seemingly, but there hasn't been anything that would suggest a major U-turn on that IHT rules. And like I said at the beginning, I think it's important that people don't rely on there being a change when there's a strong chance that there won't be. And therefore, we're still encouraging clients now to look at their assets, look at how they're held, look at what will's in place, look what power of attorney's in place, make sure they understand their position and can plan based on the rules that are in place now. Quite controversially, I don't think that the IHT rules are necessarily a terrible thing for the industry in the long run. I think what it could do in time, as long as the potentially exempt transfers stay in place, could encourage farms to be passed down a generation a bit sooner, which would mean that the next generation coming through would be of probably a more sensible age, shall we say, to reinvest in the farm, increase production and move forward. The challenge is what it has created is clearly a cliff edge, and we're seeing that in the April 2026 date, and that means that people haven't had time to really do some detailed tax planning, and that's clearly where the backlash has come from the scheme more than anything else.
And your experience for the team at the moment, are they doing a lot of work in that space? And obviously we're coming closer and closer to April. We're running out of time for those that maybe haven't taken that. Have they still got time to look at it, and what's the advice to them?
I think they've certainly still got time to look at it. I think we saw a real influx of that type of work off the back of the last budget. I do feel like we've gone through a period of a bit of a lull where, like I said, people are either expecting a U-turn or burying their heads in the sand to a degree. Time is of the essence with this. I think the sooner people can assess the assets that they have and formulate a plan for managing the IHT implications moving forward, the better. April 26 will be here very soon. So moving assets around will start to become very challenging just from a timing point of view. But it's not necessarily too late. Even if it's just a case of getting an understanding of the assets and getting a plan in place, even if it's not implemented right away, that's the first step that we would very much encourage people to do.
And I know leading into the current budget, the solicitors and accountants have sort of been declining taking on new work just because the sheer volumes of things they're trying to deal with. Is that starting to be an issue and a problem again for people thinking of maybe trying to do something before the end of March?
I think it will be. There's a lot of that sort of work happening now leading up to even this budget. So the same will apply for April next year. We're seeing that through our valuation team at the moment. We've had a huge influx of valuation work come in the last 2 to 3 months, and a lot of that has been led by some of these changes.
Yeah. So we just need to make sure people are planning ahead. Okay.
Absolutely.
From a farming perspective, obviously, we're now starting to see the reduction of BPS to the point where it's having negligible impacts on farming incomes. And then with the SFI scheme and things being closed, are you finding a lot of farming businesses now looking more at new enterprises, diversifying? And associated to that, are we seeing the planning rules starting to relax to enable that on the farm?
I think yes and no to a degree. We are seeing farmers continue to look at diversification as an option to increase farm revenue. That's been kind of a stalwart of farming businesses for a long time, but I think the pressure is probably on more now than it ever has been to look at those opportunities. I think the real key to it in terms of farm diversification is looking at what assets you have, looking at what people you have and what skill sets they have, because where we've seen it not working necessarily is where a big capital investment is required, and then that asset, whatever it is just being let or sold, etc. And I think the financial viability of that doesn't necessarily work. But if you're trying to do something in-house in terms of a diversification project, and you've got people that are willing, capable of running it, they can be really good opportunities for a farming business to add on a new income stream. And from a planning perspective, there's been some changes over the last few years regarding permitted development rights and things and change of use, which have certainly helped. But there's not been anything dramatic necessarily that have enabled that to move forward.
And I know some of the projects that I've certainly seen, the cost of development now for converting barns into residential or office space, that's quite cost prohibitive, isn't it?
It is. And I think that's coming off the back of COVID and what happened with material costs, labour costs. They got to the point where, absolutely, like you say, that the cost of developing these assets out, the returns that you're looking at just don't stack up ultimately. So unless you're using it for some form of in-house project that's been run by the farm, by the estate, they do start to become quite cost prohibitive.
And from a sort of large-scale planning perspective, looking at sort of new residential developments, infill, etc., are we seeing more activity in that space?
I think we are. This government has set some fairly strong housing targets. A lot of the previous government set very similar housing targets, unfortunately didn't meet them. So they are trying to build that into their policy. It's going to be one of the main things that they get the economic growth is through larger scale housing sites. So they have done some tweaks to their kind of regulatory framework to try and enable these developments to come forward quicker. We haven't seen drastic changes, so I think it is more evolution rather than revolution. You know, we've not seen a scrapping of the BNG rules or the nutrient neutrality rules. They are all still there in some ways. But yeah, they are trying to encourage them to come forward. Now, I think we as a company are seeing more activity in that area, and we're very much encouraging landowners to engage, particularly in the local plan. So there's been some call for sites in Yorkshire, in Durham, in Northumberland, and we've had a lot of clients engage in that process and put forward sites to try and be included in the local plan. But I still think even in addition to the local plans, there are opportunities to bring sites forward outside of the plans due to some of these housing targets that have been set.
Well, thank you, John. That's been really helpful and interesting. Obviously, we're going through this huge period of change. Do you have any sort of top tips or thoughts that people should be acting on at the moment?
Yeah, it's a good question. I think there's a lot of focus on the budget, clearly, but I think my top tip is don't wait until the budget. Don't rely on the budget bringing something that is going to dramatically change your fortunes. You've got to be proactive with your approach. And that could be all of the things we've discussed today. It could be looking at an energy project. It could be looking at succession planning. There's lots of different opportunities out there. And I think the businesses and the farmers that will be successful are the ones that proactively engage in that sort of stuff and not just wait and react to budgets or changing governments. I think the forward-thinking farmers and the forward-thinking estates will be the ones that are successful.
Yes, so focus on the business strategy and then adapt to change as you need to rather than the other way around.
Absolutely.
Yeah, thank you. If you'd like any further information on the topics that we've discussed today, please do not hesitate to get in touch with us. Thank you.